Hello everyone, welcome to Blockchain Whispers Elementary School of Crypto. I hope you enjoyed our previous video where we covered 7 things you should know before entering the world of cryptocurrencies. In this second video of Elementary series, we will be taking you further on the journey on becoming a skilled and knowledgeable trader. Just remember, after the series is completed, you will have to pass a test to get access to the next series, which is high school. So sit back, pay attention and become a pro trader. Blockchain Whispers is known to be one of the most accurate crypto predictions team in the world. This is our treat for the crypto community, all for free to learn and gain knowledge about crypto and trading. In this video, we will cover the subject, basic trading knowledge, where I will be explaining the following topics. Top 3 mistakes beginners make, portfolio management, time management, trading styles, know how to trade, understanding BCW signals, and Blockchain Whispers approach. Having a trading plan is one of the most important things that a trader must have. But sadly, not all investors follow this rule. Let me give you some examples of mistakes traders make. Firstly, using or applying the mathematical data to find mathematical anomalies that could give you the probability of more likely outcome. So for instance, using the following stats only. But in trading, there are so much more factors to consider. Then there's whipsaw. Whipsaw is a term amongst traders that describes an event that happens during a quick back and forth of the price. It is a mock crash or moon that makes knobs think their money is at risk, whether they are losing it or missing out on the opportunity to buy. So what happens? They panic sell or FOMO buy and end up with losses because the price bounces back in the other direction quickly. Then there's hold. Holding means that you're buying and holding as an investment for a long term hoping to cash out on retirement. But holding isn't always a good strategy, because at times when you decide to buy and hold on the peak, you'll end up losing money. One of the rookie mistakes that new traders make, they buy coins based on recommendations of other people and without doing any research into the coins they are investing in. Doing your own research is very important in any investment, for example by doing the following research. Firstly, fundamental analysis. Given the complex nature of cryptos and their underlying technology, it is important for us to engage in research to access the availability and potential of the coins. This ensures that you will make better investment decisions and that you are in the loop of things. But more importantly, a good understanding of a coin's fundamentals allows you to form your own opinions and have your own stand. We also have technical analysis. Traders use technical analysis to help them better understand what is happening in the marketplace and gain potential insight into what may happen next. Many traders who are new to technical analysis often have misconceptions about what it is and isn't and what it can do for them. There are 5 aspects in technical analysis that, if understood, will help you better determine entry and exit points as well as offer clues to potential future price direction. In our Blockchain School of Crypto, we will be teaching you the importance of technical analysis and how to read them. I know there's a lot of people out there that heard the word FOMO. FOMO means fear of missing out. It's the feeling of anxiety arising from the belief that other people are making more profit, which results in bad investment or decisions on the spot without doing proper research first. Trading is a very demanding occupation, but the beginner's luck experienced by some novice traders may lead them to believe that trading is a preferable road to quick riches. Such overconfidence is dangerous as it breeds complacency and encourages excessive risk-taking that may accumulate in trading disaster. Volatile markets are the ones that the price moves vigorously and unpredictably. It's important to know that some commodities are more volatile in characters than others, but volatility is mainly a factor of characteristic that affects all markets at different times. So let me explain what is a gem in terms of trading. When something can really be considered a gem, it would have a low market gap relative to a potential and value you see in it. A low market gap, in this case, is not a certain amount, but sufficiently less what you think it's worth. Guys, most gems are just shields. It is important to always diversify your portfolio into different coins or tokens, because remember, a trade can also go south. By spreading your portfolio on different coins, you can prevent losing all when a trade goes bad. For instance, you lose 20% on a trade, but you gain over 400% on the other coin you are holding. In this case, the 20% that you lost on a single trade will be outperformed by your wins. It's all about knowing when to get out of a trade that makes you become a successful trader. I want you guys to always have a solid understanding of exactly where the market may encounter an increase of supply or demand. This will allow you to trade between the levels, so to speak, which is what trading with price action is all about. Traders use different strategies when identifying and capitalizing on opportunities in the market. Some traders prefer to enter and exit trades within a single day, while other traders hold onto positions for weeks or months. If you're just getting started, Blockchain Whispers will teach you everything you need to know. You'll learn market terminology, how to identify trends, and even build your own trading style. Now let me help you with some portfolio management. If you have 100% capital available for trading short term, the capital should be split into 4. Short term, 25% of capital, 2 coins max per investment. 25% long term calls, 2 coins max per investment. Then we have 25% BTC and 25% Ethereum. Our second portfolio would be 20% short term calls, 2 coins max per investment. 40% long term calls, 3 coins max per investment, and 40% BTC. Now we've got portfolio 3, 60% long-term calls, 4 coins max per investment, and 40% BTC. The best practice for you often depends on preferences. You need to ask yourself the question, are you an investor with not much time and prefer to do long-term investments without much active trading? Then portfolio 3 might be for you. Where a day trader, for example, often has a portfolio that looks like portfolio 1. The second practice you should block is emotions. When a trader gets over-emotional about a trade at any time, he cannot think clearly because emotions take control over his common sense. Emotions will cloud your judgment, block your thinking, and therefore prevent you from being creative. Let's put this in a different way. Emotions override logical thinking. FOMO is a good example of emotional trading. When you are investing or trading, you are making a decision about what and when to buy and sell. The market situation section of your plan includes research and analysis of your target investment. There is a word that traders use, and that is SWOT. That means strength, weaknesses, opportunities, and threats. Analyzing can help you determine the best areas to focus your investment efforts. Research is a part of any investor's due diligence. It is wise to do your homework about any investment before you put money into it. Crypto traders have several tools to access the cryptocurrency market. One of them is an approach known as technical analysis. Using the method, traders can get a better understanding of the market situation and isolate significant trends in the market. This data can be used to make more educated predictions and wiser trades. On this image, you will find a pattern trend line. Bitcoin is downtrending. Most altcoins follow the downtrend path with Bitcoin. On the second image, you will find a pattern trend line. Bitcoin is uptrending. Most altcoins follow the uptrend path with Bitcoin. On this last image, you will find 2 pattern trend lines. In many cases, altcoins follow Bitcoin's move, but with sideways movements as seen on the image, altcoin's direction normally starts an uptrend movement or a downtrend movement, normally free to move whatever direction they want. Ideally, traders should use a longer time frame to define the primary trend of whatever they are trading. A day trader could trade over a 15-minute chart, or even use a 16-minute chart to define the primary trend. There are even some traders that use the 5-minute chart to define the short-term trend. So in other words, before you start trading, you need to pick a time frame that suits your trading style. It is also important to determine the amount of frequency that you're willing to trade at. This can be multiple times a day, week, month, for example. The most important thing about trading is knowing when to enter and exit a trade. Entry of a position is when you buy into the investment, and exit is when you take profit or cut losses of the trade investment. An exit strategy for any trade helps you minimize losses and lock in profits when needed. It also ensures you that you do not have a mere holding strategy without a limit. These are the facts you need to know before choosing a trading style that best suits you. Firstly, I want to explain what an intraday trader is. Intraday traders are the most popular thing in Indian stock markets, especially amongst new generations. They come with small capital and use leverage to trade and gain some bucks. But intraday trading involves huge risks. They risk losing partial or the whole capital. Technical analysis is more important than fundamental analysis for a day trader, as they are looking to enter and exit on a short time frame. In this case, TA can determine potential breakouts as well as good entry points and exit points. Time frame, minutes to hours, is the time frame you choose to trade with. You'll have options to pick anything from 1 minute to 12 hours. You will need to pick the time frame you trade the best in. Now let me explain what a swing trader is. A swing trader tries to buy the bottoms and then tries to sell the tops. That allows them to make huge gains. Catching bottoms sounds easy, but like any strategy, trading bottoms has risks. Traders are in the opposite direction of the former trend, a trend that could emerge at any time. As long as the risk is controlled, this downside is outweighed with a proper strategy. Now let me explain what is selling tops. A top refers to a price peak of the asset during a tending period, prior to the deadline in price. These small shifts in price are the primary focus of a day trader. The time frames that a swing trader would use would be days to weeks. You'll have options to pick anything from 1 day, 1 week, or 3 weeks. Long-term refers to the extended period of time that an asset is held. A long-term asset can be held for as little as 1 year or for as long as 30 years or more. This is what a position trader does. The time frame would be months. You'll have an option to pick anything from 1 day, weeks, to months. Each letter in the word prepare means something, so let me help you with the letter meanings. When we look at pattern and price, we need to know that patterns are the decisive information created by the movements of the coin price. A pattern is identified by a line that connects common price points, such as closing prices or highs and lows, during a specific period of time. A risk-to-reward ratio is a formula used to measure the expected gains of the investment against the risk of loss. The acceptable ratio can vary. Trade advisors and other professionals often recommend the ratio between 2.1 and 3.1 to determine a worthy investment. The model of a perfect competition assumes easy exit as well as easy entry. The assumption of easy exit strengthens the assumption of easy entry. By checking the past performances, you can see how you made the profit trade or the loss trade. This will help you locate how to make better moves in the future. Location of time. In simple terms, the asset location of time refers to the balance between growth-oriented and income-oriented from investments in your portfolio. This allows you as an investor to take advantage of the risk-to-reward trade-off and benefit from both growth and income. Just like most things in life, you need to ask yourself a reason before deciding to do anything. The same applies for any trade or investment. Those reasons you have is important to know before investing in any asset. Last but not least, we have environment. This means sustainable development, protection, and preservation of the environment. Those are the fundamental goals. Desired price is the market price you wish to enter or buy the coin. Multiple buy limit orders is an order to buy a coin at or below specific prices. This allows you as a trader to specify a price you are willing to transit. By using multiple buy limit orders, you are guaranteed to pay that price or better, meaning you pay a specific price or less for multiple purchases. Just like buy limit order, the same applies for sell limit orders. A multiple sell limit orders is an order to sell a coin at or above specific prices. This will ensure you to make more gains. A stop loss order is an order you set to prevent losses in case a coin drops sharply in the price. For example, when a coin falls and hits a price of 500 Satoshi, and you would like to sell it for 499 Satoshi to prevent holding a bag. In this case, the price of 500 Satoshi is your stop or trigger, and the price of 499 Satoshi is where the limit sell order is. Successful trading is all about research and analysis. Research is any organized effort to gather information about the asset and markets. Always read analyses, but please guys, do your own before entering any trade. This is one of the most important components of strategy. A plan is a systematic method for trading coins that takes into consideration a number of variables including time, risk, and your objectives. When we have an update on BTC, you will be provided with detailed forecast. This forecast is based throughout analysis of the market using technical analysis and fundamental analysis. We will only post these updates when there's a strong indication of BTC direction. We often deliver signals based on this as well. Blockchain Whispers also provides short-term signals. When we provide a short-term signal, we will provide them with a description to make you understand why we share the signal. This can be fundamental or TA based, but also when we have an insider info. We will provide you with a buy area where you can set your buy orders and of course also a target area where you can put your sell orders. With short-term signals, we will provide you an estimate of the time frame which the call should occur. These are often quick gains ranging from 10% to 30%. Then there's long-term signals. Once in a while, we'll find a gem. A gem is a coin or a token that is very undervalued and which has a potential to grow. These would be the long-term holds though. When we provide a long-term signal, it will be based on fundamental analysis done by one of the world's best, Mr. Y. When we give you a gem, you shouldn't rush into it directly, but first take the following steps to see for yourself where you should buy and then hold. Always research the coin or token for yourself. Analyze BTC, because if BTC drops heavily, the price of the coin or token will drop as well, which means you'll have a better entry. It's always good to study the charts of the coin or token itself to provide you with a good entry. For example, do try not to buy a big green candle. So don't chase it or be greedy, but look for a decent entry on a dip. There's also a fair warning to be aware of. Long-term hold can dip. This doesn't mean they failed or that you have to sell them. For instance, when we signaled Pondy X, it dipped almost 40% afterwards, but it gained over 2000% when it started his run. We at Blockchain Whispers do all the things that are necessary to have a good view on the market and provide you with good signals. We will find what to trade and when to trade it. We will make sure that fundamental and technical analysis is done properly. This way, we can always verify the signals we give to make sure you get the best signals that are around. In this lesson, Basic Trading Knowledge, you have learned the basics of trading cryptocurrencies. You can now properly manage your portfolio. You have an explanation of trading styles so you can determine which style suits you best. And of course, you also know how to manage your time trading crypto. Isn't this great? Stay tuned for our next lessons in Elementary series, where we will be teaching you about volume, trend lines, support and resistance. Make sure you subscribe to our YouTube channel and press the notification bell to get all the published videos firsthand. Also, make sure to subscribe to Blockchain Whispers on our website, www.blockchainwhispers.com. Read all the posts from the very beginning and you will learn about our journey and why we are the best, and also how Blockchain Whispers can help you achieve your financial goal and trading knowledge. Thank you everyone for watching. This is Blockchain Whispers, baby.